Well, hello and welcome to this week's update here on YouTube. We'll talk about ExxonMobil in just a second. Let's talk about the overall market. Right now, we are in neutral opening range mode. We know that we set our opening range, which is 92% accurate, by setting the high and the low of the first trading day of the month. That will act as the range between bullish and bearish or neutral up until when? The third Friday of the month. Then we reset the range. So right now, we have a range here. Write these numbers down: 3698.35. If it's above that, we're bullish. Below 3604.93. Below that, we're bearish. So we'll be keeping an eye on that. We do have this low here, this pivot here, which is right at 3584. But right now we're neutral. Okay, so if we start to break below that opening range low, we're looking to move lower and we're bearish in the overall market. So write those numbers down. We do have the CPI coming out this Thursday. This is going to be very, very interesting. 8.1 is what they're forecasting. So lower than that, markets will like that. Higher than that, the markets won't. Why? Because the Federal Reserve will be open to continue to raise rates aggressively if it is higher than that, or it doesn't come down probably. So that's what's going on there. Now, the reason why we had a move lower, right? We had the pop higher initially, right up to the 21, failed at that level, and has now moved lower pretty considerably down on Friday, 2.8%. Why is that? Because we had strong jobs numbers, okay? They're expecting 250 jobs, and they got 250,000 jobs, but they got 263. Unemployment rate fell, so the jobs market was stronger than expected. What does that do? That then says to the Federal Reserve, well, if the labor market's holding up well, the jobs market's strong, we can continue to raise rates. We don't have to worry too much, right? That's what that says, and which is why the market's then sold off. But the upcoming meeting in November is certainly going to be basing a lot of their numbers on the CPI, right? What is it actually going to come out this Thursday? So we're going to be keeping a close eye on that because that's really going to cause the markets to move, and we'll be keeping a very close eye on that. Now, Bitcoin's holding up okay, better than the SPX and the Nasdaq, no doubt about that. But if we look at the US dollar, it's still very much within that uptrend. If it keeps moving up, Bitcoin's going to struggle. The overall markets are going to struggle to move higher as well with the dollar moving like this. So we'll keep an eye on that. Had 3 straight up days here, but we are still very much within that upward trend right now. Now, we are operating at maximum fear right now. The number of stocks above their 50-day moving average is only 18%. The SPX put call ratio that we're looking at here is bearish. That's actually very bearish. The skew, perceived risk of a market crash, is neutral. The trend is very close to being bullish, above 2, and it's bullish. And the combined put call ratio of 1.04 is actually bullish. So there's a couple of signs there that we may get a little bounce. Remember that the bond market is closed on Monday, right? I think it's Columbus Day. So when the bond market's closed, you can get some weird moves in the market. So keep an eye on that. But CPI on Thursday, right? Not a bad week to just sort of sit on the sidelines would be a pretty smart move. Now, the trade that we had on was a very aggressive, or not very aggressive, but a trade, a bearish put spread on the SPY. So what we did is we sold the 345, bought the 355. Okay, so a put debit spread. Last week, some members closed it out for a 25% return in a week. Excuse me. And then other members could close it out right now for a 12.2% return in 2 weeks. So either way, you could close that out now and be done with the trade. Good winning trade, and get out of it ahead of the CPI number, because we don't know what's going to happen there. That's not a bad move. Or if it gets above 3698.35, the upper opening range, then close the trade out, right? Because it could certainly continue to move down from here. So there are 3 different ways of being able to manage the trade. Last week you had a great return. This week you can still make a good return, or hold on to it looking to make further profit. But if you've got to have a line in the sand somewhere, right? Some risk level. And if it does move above the upper opening range, 3698.35 in the SPX, then close it out, right? So that's certainly a thing you can do. Our now put spread trade got stopped out. Our Twilio trade got stopped out as well, but only for a very small loss of $25, right? That's part of trading. You can't have winning trades all the time. That's called fairyland. But so long as you've got asymmetrical risk in your favor, you will make money. So a new potential trade this week is ExxonMobil. Let's have a look at it. So if we have a look at this right now, it is up against the upper trend line here, probably looking to move lower from here is what I'm anticipating. It's overbought right now, up against the upper trend line here. I'm looking for this to move lower. We have a gap to fill here around 95.5 ish. So I'm looking for this to move lower, get down below 100, and we could set up a position that looks like this. Okay. So we could buy the 105, sell the 100 put for the 18th of November expiry, 39 days from now. Our break even is 102.27, and our the cost here is 273 for one contract. Okay, potential upside is 227. So putting in 273, if it moves below 100 and stays below there at expiry, 18th of November, you would then turn that 273 into $500, right? So 83% return on risk. What you could do is you could set your stop at $1.73. Okay, so entering primary order 273, stop at what $1.73, and your profit taker at $4.73. So what would that do? That would then give you a potential profit of $200 a contract with a maximum risk of 100. Okay, 2-to-1 risk to reward, asymmetrical risk. The actual trade would look something like this. I'll just expand that for you. Exxon bear put, you're entering the trade for the 18th of November, buy the 105, sell the 100, profit taker at 473, your primary order 273, profit taker at 473, make sure it's GTC, good till cancel, and then your stop loss at $1.73, right? So potentially making 200 and to risk 100 to do so, right? So that's what we're looking at there. Let's wait and see what happens. Ultimately, my view has not changed. I still think that ultimately we go back to the levels we were before the pandemic hit, which is right here. Okay, around 340, 337 there on the SPY. Trillions of dollars of stimulus pumping money into the economy. Where are we going to go? Right back to where we started, right before they did all that. Fantastic job, Federal Reserve. Now, what they're going to do now, they obviously went to the extreme that way. Now I think they're going to go to the extreme the other way and continue to raise rates too aggressively, too quickly. Right? It takes around 6 months for a rate rise to really filter through to the economy. They're going to continue to raise rates. They're going to go too far, make the wrong move again, causing markets to fall, causing markets to pull back, and it's going to be devastating for the economy as well. Then what they'll probably do at some point is pivot, and they'll say, goodness me, we can't keep doing that. The market's crashing. The economy is really hurting. Let's pivot and not raise rates as much. You'll then get an incredibly large move in the markets to the upside. We're going to make money in either one of these scenarios, so we're happy with what happens. And then that's going to cause more inflation. And Federal Reserve can't really do anything about it at that point because the inflation rate is well above their 2% target, and that's where you get yourself into a whole lot of trouble, right? So something like that is probably going to play its way out. I think ultimately the Federal Reserve is a doomed institution. They've made the wrong move every single turn, going to the extreme in both scenarios, not doing a great job, right? Ultimately getting rid of the Federal Reserve, blaming everything on them, and then moving into another mess. But who knows, right? So that's what's going on right now. CPI coming out on Thursday. Keep an eye on the opening range, as we spoke about before. You know the numbers. As a potential trade you could do on ExxonMobil, looking for it to move down just a little bit in the short term, and we will see what the market gives us next week. Bitcoin's holding up okay right now. Better than certainly better than the Nasdaq or the SPX. So we'll wait and see what happens there. But ultimately, I do see the markets moving back down to that level of around 340, 337 on the SPY. Okay, and also on the Nasdaq, going back to their previous highs before the pandemic hit. That's where I think we're going. It's a good move down from here, about 10%, another 10% move on the Nasdaq, a bit less than that on the SPY. So we'll wait and see. So that's what we've got this week. We are still operating at extreme fear. So let's let the market tell us what it wants to do. Let's let the reports come out, and we will take things from there. All right, my friends, talk to you again next week. All the best, and bye for now.